Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, it's a good Friday that's shaping up for the day straight. We're seeing good gains coming in for the Nifty. If it's up 250 points as of now, approximately 25,000. What it's managing to hold on to. Sensex is up almost 800, more than 800 points as well. So that's holding on to gains of almost 1%. Outperformance or good performance also coming in from the broader end of the market. That's also managing to hold on to good gains. So Nifty mid cap and small cap both holding on to gains of approximately 1% and more than 1% is what we're seeing for the Nifty mid and small cap. Banks, that's where we're seeing a good move coming in as well, up almost 1%. In terms of contributors for the Nifty 50, also if you look at it, we have a lot of private banks that are managing to do well. So look at something like an ICICI Bank or something like an HDFC Bank. That's managing to be among the top contributors. And other than that, Reliance Heavyweight also is holding on to gains of almost 1.4%. So that is something that we're keeping an eye out on. Look at the list over there. And most of it are just banks coming in today. So that is where we're watching out for in terms of a good up move coming in. Nifty also led by mainly banks and Reliance and Bharti Airtel. But yes, that's how we're seeing the market setup looking like. But this is a show where we solve all your stock-related queries. And to do just that, we have our experts joining in with us. We have Sharad Avasthi of SMIFS as well as Vaishali Parekh of Prabhudas Lilladher joining in with us to answer all those queries. Vaishali as well as Sharad, good afternoon and thank you so much as always for joining in with us. Vaishali, a quick check on the markets, right? Today, finally, some good mood coming in this muted week that we could say a range-bound week. 25,000 is what we've managed to cross as of now at least. Do you think that's something that we're watching out for and what are the next levels that you're keeping an eye out on?
Hi, very good afternoon to all of you. So yes, after a very long time, Nifty has moved beyond 24,950 and we are sustaining well above that. So important is that we should close also about that. And today, now that we are seeing overall, once again, a good participation coming in, I think I would still maintain that 24,700 should act as a support. And 25,150, which was the hurdle earlier, it continues to be the tough resistance from here on. Once we see a decisive move about 25,150, I think we are back on track for a bullish view going towards perhaps 25,400 and so on.
Okay, so 25,150, important to watch out for. If we cross past that level, could see further up moves coming in, and that's a word coming in from Vaishali. On that note, let's get started with the stock-related queries. We have the first query that's coming in from Saili, who's writing to us from Hyderabad. Holding 10 shares of Jio Financial Services, prices 280 rupees per share. Wants to know whether she should continue to hold this or look to sell this. She wants both the views, short-term as well as long-term view. Right now also, she's making, it's at 292, so just making a little bit of profit on this one. Sharad, good afternoon. And Jio Financial Services, what are you watching out for on the fundamental front? And should the viewer continue to hold this? They want to know on both fronts, whether it's short-term or long-term. What is your suggestion?
Yeah, good afternoon. So I think for Jio, in a nutshell, what we are looking at is we were initially working with a fair value of 350. It oscillated to those levels and then it has come down again, moved back. I think the big advantage that you have with Jio is that this is a company which would not typically work like a traditional NBFC where, the initial phase is a lot of legwork is required for you to move beyond a particular zone. Firstly, getting the funds on your balance sheet, then getting the advances on. I think everything is a challenge for a new NBFC. I think with a strong group backing, strong book value already in place. Look at the way the BlackRock initiative has gone through. So I think this is an NBFC which should be off the blocks very fast. That is the big advantage you have. But still, the NBFC lending business or any kind of financing business is usually not as fast as a manufacturing, like where you just put up a capacity and then the things slow down. So I think it will take a bit of time. Initially, what we are working with is targets of around 350. But if you are looking at an NBFC that could grow very fast and very large over the next 4 to 5 years, I think you should continue to hold. But if you have a shorter term horizon, 1.5 year, I think you could still continue to hold with a target of around 350. But long term, certainly, I think you should continue to hold. If you can stretch your horizon to 4 to 5 years, this could be a very interesting story to watch.
Okay, interesting story to watch in the long term and short term also. The target that Sharad is talking about, 1.5 years, then 350. Vaishali, what are your targets that one should keep an eye out on, short term as well as long term, since our viewer wants to know both the perspective?
Sure. So for short term, I would say it is showing once again a good bullish candle today. And I would say for short term, keep a stop loss of 280 levels. And I think once it moves about 295 and sustains above that, we could see a trading target going towards 305. And for a long term perspective, I think the stock is already in a trend. Well, in at the positional hold, it can retrace towards 260 levels. But as I said, that 303, 305 is the resistance level. Once we see this move above, I think one can expect a target of 350, 360. So view is quite positive. It is in a trend, but the levels are important to be noted.
Okay, keep an eye out on those levels over there for Jio Financial Services. Next query for today is coming in from Subramanian, who's writing to us from Bangalore. He's holding 49 shares of Suryodaya Small Finance, and this is at a price of 305 rupees per share, and also 100 shares of IOB, and this is at a price of 24 rupees per share. So for both these stocks, they want the long-term view, whether they should continue to hold or they should look to switch from this counter. Sharad, your view coming in, Suryodaya Small Finance and also IOB.
So Suryodaya is basically the MSM microfinance space. They are lending a lot to joint liability groups. So I was expecting, that since you are lending a substantial amount to joint lending groups, maybe the NPA spike won't be as steep as it has been. But I think from 2022, they peaked on GNPAs around 5%. Again, they have gone up to 4.5%. So ideally, what we are expecting is that it seems like it's moving fast into that high credit cost cycle very fast every 2-3 years. So that's a bit of a challenge. But I think at 0.8 times price to book, most of the provision coverage already done. I think we are looking at a stage where most probably, the microfinance pain in the system has more or less peaked out. And from here on, we should see some improvement. NBFC related relaxation from the central bank has already come in. The focus is largely on growth. So I think, it's a bit of a risky counter, but at 0.8 times price to book, I think most of the bad news is priced in. And as the recovery happens that we are expecting to see across microfinance and MSME, Suryodaya should substantially benefit from it. And, next year you could be adding around 16, 17 rupees as earnings. And it gets around 1.5, 1.6 times price to book. Then I think you continue to hold for targets of around 300. But it's a bit risky because of the way the NPA cycle is moving in this particular bank. But I think since you're bought into it, stayed put for so long, I think the space is bottoming out. There is high probability you can continue to hold for around 300. For IOB, I think the fact that the whole NPA cycle has been very well adjusted. Net NPAs are roughly negligible at 0.37%. Most of the holding is with the government only. So most probably FY27, we might see some selling by the GOI. I believe that is what is showing up. I think it is probably something that is showing up in the valuation of IOB. So I think at 2.2 times, maybe, IOB doesn't really make sense. Even if a deal does happen, I don't think it will be at a much higher premium to the current multiple. So IOB, you can exit. Suryodaya, you can continue to hold for targets of around 300.
Okay. And Vaishali, your view coming in for IOB and Suryodaya, should they continue to hold, sell, switch to something else? And this is the long-term view that they want.
So let's talk about Suryodaya first of all. I think the recent rally, which we saw the high that was made was 230 levels, and now it's bouncing back from the oversold. So since long term is the view, I would say the stock is still, we can call it as a bounce back rally. The range lies at 120 as support and 160 should be the near term hurdle. So once we see a decisive move above 130, that could give you a further target of 200 to 20. That is my view for now. Compared to IOB, though being oversold and looking attractive, in a banking sector, I'd rather go which is already showing a confirmed trend, something like an ICICI Bank or so. So if you're ready to shift, I think ICICI is a better option.
Okay, ICICI is a better option if you're ready to shift. That's the word coming in there for IOB specifically. And Suryodaya, we've seen Vaishali as well as Sharad give their views. Next query for today is coming in again from the financial side. Avinash is writing to us from Bangalore. He's holding 440 stocks of Yes Bank, I beg your pardon. This is at a price of 65.67 rupees. Wants to know whether to average further or should they exit the stock? Sharad, your view, averaging, does it make sense or should they just exit Yes Bank?
No, I think with finally the deal probably is going to happen. And I think when you have held through the pain, the thick and thin of everything that you have seen over the last, 5-7 years, I think it makes sense to stay put in Yes Bank now. In case most probably the deal will go through, there's a new promoter at helm, so probably the base building process has completed at the bank, and from here on you could expect a very sharp recovery. So we are looking at 1.3 times price to book right now. I think with a strong management in place and strong guidances, a strong trajectory, because SBI was largely just keeping it afloat. So I think that stage is past us, and from here on there could be a probability that once the new management comes in with a majority stake, there could be substantial re-rating. So I think, stretch your horizon to around 3 to 4 years, because like any in banking and BFC, it will take a bit of time. But I think you could see substantial improvement. Whether you get 65 or not, I think that's something that you will have to wait and see. But certainly, I think the price to book multiples could easily, double from here. So it starts trading at 2.5. That is the kind of upside you have. So I think doubling of prices is something I'm looking at, but extend your horizon 3 to 4 years. The new management comes in, growth rate starts picking up. I think you could be looking at 40, 45 on the stock.
Okay. And on the technicals, what should we keep an eye out on? Should they look to average Vaishali right now at these levels, or should they just exit the stock?
Well, if you have to, if this is your choice, then of course the average, but the confirmation in reversal would come only about 23. But I maintain my same view that a lot of ifs and buts, so I would rather go for frontline banks.
Okay. I just wanted to mark some of the flashes that were at the bottom of the screen a short while ago that came in from us. They're saying that they will temporarily pause calling the port of Haifa with Maersk-operated vessels. And at the moment, they're saying that we are not experiencing further disruptions to scheduled operations in the region. So this is the word coming in there. We're keeping an eye out on Adani ports on the back of that as well. You've seen them flash at the bottom of your screens just a short while ago. So that's the latest update coming in here. Maersk is saying to temporarily pause calling the port of Haifa with Maersk-operated vessels. That's the word there. But on that note, let's move on to the next query for today. We have Harsh, who's writing to us from Noida. He's holding 50 shares of Anant Raj. This is at a price of 568 rupees per share. Wants to know the short-term view on the stock. Anant Raj, short-term view, what is it, Sharad?
Unfortunately, this is something I don't track. So.
Okay. Okay. Short-term on the technicals, Vaishali?
Yes, so currently it is at a very crucial support level of 500. If the stock drops below 500, it's calling for further selling. But till then, I think if the support is respected, this can go towards 550, and from there on 630 would be the trading strategy. Above that, these levels, we can have a relook.
Okay. That's a word coming there for Anand Raj. Keep an eye out on those levels. But on that note, we're going to slip into a very short break. But here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app from the Apple Store, Google Play Store, or you can just scan the QR code that will be coming up on your screens. Welcome back to Your Stocks on CNBC TV18. We're keeping it going with all the stock-related queries. And to solve that today, we have Sharad, Avasthi, as well as Vaishali Parekh, who are still with us. The next query for today is coming from Mohammed, who's writing to us from Noida. He's holding 500 shares of Persistent System. This is at a price of 5,200 rupees per share. So they're making a profit on this one. Wants to know, does it make sense holding the IT pack and holding Persistent Systems specifically, or should they book out their profits? Sharad, your view coming in for Persistent Systems, given that, obviously there were recent notes that suggested also some bit of an improvement coming in terms of revenues from these IT companies as well. Is that what we're watching out for now? What is your outlook for Persistent specifically?
Yeah, across IT, I think, as you rightly pointed out, there should be some improvement because last quarter, when the numbers came out, we were in total turmoil as to how this tariff situation would play out. So I think we are on much cooler waters right now. So most probably this time around, when the quarterly numbers are out, they will have better understanding of how the international space will play out, particularly with respect to US and Europe. So I think that would be there would be some calmer nerves, so they would be more proactive in what they expect, regarding the future outlook. They will be more pronounced, and I think gradually as these problems, die down over the next 10-15 days, there is high probability that even the IT budgets, etc., in the US, etc., should substantially improve, and we should return to normalcy. That should see some improvement. Persistent, what are we expecting? We are expecting 18-19% kind of top line growth, 20-22% kind of bottom line growth. So it's already trading at 53-55 times 1 year forward. So I think it's a bit stretched at these valuations. I think it's better you switch to something like a Cyient. It has its own share of challenges, but at least you have some margin of safety in terms of the valuation at which it is available. Considering the growth rate this is going to clock. So I think within the space, it's better to switch from Persistent to something like a Cyient.
Okay, that's the word coming in there on the fundamental front. Switch to Cyient. So book out your profits from Persistent is what Sharad is saying. Vaishali, your view coming in for Persistent System. On the charts, is there an indication of a further up move that we could watch out for now? Or should they book out their profits?
No, I definitely think so that there is scope for further up move because, of course, it's a gradual up moving stock and it has, after making a low of 4,000, it's currently at 6,000. So in my opinion, the buyer should probably book partial profit and look for a further buy at around 5,800, 5,600 levels because when I'm looking at the data and I think the projection comes to around 6,800, which was the previous high, recent high, it's very likely it can retest these levels. So I would say yes, hold and book partial profit.
Okay. Hold and book partial profits. We also have some flashes coming in for HAL. They've won a bid to privately make small satellite launch rockets. This is just coming in right now. As of now, the stock is up almost 1.3% in the trading session right now. So we've seen that spike up coming in after this announcement has come. So surely keep an eye out on HAL. Let's move on to the next query for today. We have Chanchal who's writing to us from Mumbai. She wants to know the outlook for Federal Bank for short term, that's 4-month time period, and Ambuja Cement 6-month time period. Sharad, your view coming in. Federal Bank as well as Ambuja Cements, both are short term queries, less than a year time period that they want to look at entering the stock into.
So I think Federal is fully fairly valued at these prices. Okay. I can't see much upside within that time frame. Long term, obviously, the bank's done well. So I think obviously one of the banks which is always better on the credit cost cycle. The type of improvements they've brought in. But 1 year, I think maybe price to perfection. I don't see much improvement in Federal Bank on a 1 year time frame. And the second one you said was?
The second stock was Ambuja Cements.
Ambuja Cements. So I think again, 3-4 months, the way the monsoons are going, most probably you will not have much positive news from most cement companies. But beyond that, I think I'm very positive on that space. Within the group, Dani Group, I think I would be more happy to, bet on ACC if I wanted to bet. But maybe the next 3-4 months, you would not get much of limelight from this. But I certainly think the type of ground activity that you are expecting, post-monsoon, you could see some very smart recovery across cement stocks. Within the group, I think within Ambuja or ACC, if I had to choose one, I think with the type of improvements we expect, on the EBITDA per ton, ACC could be a much better candidate. The margin of safety is also obviously also much better because of the EBITDA per ton. So I think within the group, if you want to switch and you want to extend your horizon to a year, I think then maybe ACC is a good bet to switch to.
Okay. Your view, Vaishali, on both these stocks, Federal Bank, Ambuja, they are just looking for a very short term. 4-month time period for Federal Bank is what they were looking at, and 6-month time period for Ambuja Cements.
Well, Federal Bank, it's quite sluggish. 4-month time period can, if all going well, it can go towards 220 to 25 at the most. And as far as Ambuja Cement is concerned, well, I think right now it's in a very strong consolidation phase, but it needs to move past 560, 570. Then you can see a further run up coming towards 620. So if time is not the restriction, look for a target of 620.
Okay, keep an eye out on those levels, but depending on the timing, right, even for Ambuja, if time is not a restriction, then those levels do merit at 620 around for Ambuja Cements. Next query for today, we have Prabhu, who's writing to us from Chennai. He's holding 250 shares of HCC. This is at a price of 36 rupees per share. Short-term investor wants to know if he should continue to hold the stock. HCC, your view, Sharad?
HCC, I don't cover.
Okay, and Vaishali, your view?
So I'll say long-term view, when you see the stock has been beaten down right from 120 and now at 30 levels. Even if you see the shorter time period from 58, it has fallen to the lows and then now it's showing signs of bounce back. So I think it is showing signs of reversal. So in my opinion, he can average out since his cost is higher. Keep 28 as stop loss and let's see, this can go towards 38 to 40.
Okay, keeping an eye out on those levels over there. But with that, we are absolutely out of time on this edition of Your Stock. So thank you so much, Sharad, as well as Vaishali, for joining in with us on the show and, as always, solving our viewers' queries. And viewers, thank you so much for sending us your queries. Remember, you can always send us your queries on that email address that is flashing at the top of your screens. But thank you so much for tuning in today. Hope you'll have a great weekend. But don't go anywhere. Last 1 hour of trade is still left. And to take you through that, your closing bell up next.